Hey everybody, David Skrika here. So today's stock chart of the day is we're going to look at um the employment report. It's stronger than expected, 272,000 jobs. So the Dow kind of had this reversal. So it's not really a stock chart today. We're just going to look at the effect of the employment report on markets. Gold tanked on it. Gold was already down a lot overnight into it. But what's kind of interesting, we had a lot of reversals in market. You can see the Dow, which is actually not which is over 1,000 points actually from its highs. So about 3% off highs, where S&P is right at highs because S&P is a larger uh tech weighting. I don't know why that's happening. I'll do that again. Come on. No reason for that. Give me a second here. Bear with me. Yeah, there we go. I don't know why that was going on before. So okay, yeah. So here's the S&P, and you can see the S&P kind of like came off. So it's right at the highs though. So you haven't even really seen a correction yet. And of course, the NASDAQ would be the same, NVIDIA, of course, et cetera, et cetera. But, what we did see is a reversal that the market kind of rallied because, the economy is still good, employment is still strong, et cetera, et cetera. And we have a lot of cross currents with the economic indicators right now. If we look at stuff like industrial production and the whatnot, it's much weaker than expected. And if we look at other things like whatever, it's uh uh, industrial production and the dollar, sorry, industrial production and other economic indicators, we're seeing signs that it's rolling over. We saw the batterings from American Airlines. We've seen Expedia. Got Expedia up here right now. Just to look at it, you can see Expedia, it's kind of rallied recently, but you can see Expedia had two gap downs in its last two earnings reports. So, we're seeing travel slowing down. We're seeing industrial production slow down. Employment's kind of last one to go. And also, these employment reports are very skewed right now. Most of the internals of the report are showing that most of the job gains are part-time jobs. A lot of actually even the tech world has been laying off people. And those kind of people are getting part-time jobs, right now. And making $200,000 or $300,000 in Silicon Valley is a lot different than making $30,000 a year in a part-time job. So that's why I don't think that and employment is always the last thing to kind of roll over. But because of that, Europe and Canada and places like this are starting to cut rates, and the U.S. is nowhere close to cutting rates. I looked at it. We're still basically at like by the election, maybe one rate cut and 50-50 to two by the end of the year. I think that if they don't cut rates basically by the end of the summer, you're not going to see that September meeting. They're not going to cut rates right before the election unless there's some kind of big tank in the stock market. So you can see the US dollar index. Actually, because I'm doing it on the weekend, we can look at them at the USD, and you can see the same thing, kind of sold off and then reversed. And we're getting here. And if we can break these highs, now we're quite a ways away from that. You can see we're at 104.86. The highs are on 107, 106 to 107. But if we break these two highs here, we'll go much higher in the USD. And a lot of times in these kind of corrections, you see the US dollar go higher as liquidity tightens. So then if we go look at the long-term bond, it had been rallying a bit, or yields have been falling, and then they kind of reversed. We're up pretty good, 15 basis points on Friday and back above the 200-day moving average. So then, of course, the big news for us in precious metals, gold got absolutely whacked because, again, it looks like here. Now, I don't really know what's going to happen to gold here. Is this just a consolidation like what happened here? And this was like, go count here, 1, 2, 3 months. We're only 2 months in this. So this could happen for another month, we could still consolidate on gold till maybe the end of July. And this is the seasonal weak time period for gold. So maybe this will continue to consolidate. Maybe we even remember the old resistance was this 2150. Maybe we go down to 2200 or 2250, and then what would happen if that were to occur? You would see you would get oversold, and there'd probably a lot of bearish sentiment come in. So we see the GDX. But look at, for those of you, I know some people didn't really get in a lot of the gold stocks when they bottomed in February. This is now going to give us it was down 7%, the GDX on Friday. And now we're going to have an excellent chance to maybe re-enter the trade for some of you. It's GXJ, you can see it was down 7.5%. So, but still we rallied from 31 to 47. Now we're at 42. So maybe it goes down to 39.40, and that finally gets you another position, and we get kind of like over sold in there to do that, right? Of course, we go look at silver, same kind of thing. Like silver, I'm a little kind of disappointed in. I thought when it broke through that 30, 30 would then be like, the 30 would like, be now the 30, which was the resistance, and now be the support. But of course, we're now below 30. We're not significantly below it, etc. But same thing, maybe silver will, we kind of draw, well, this trend line here would be this one. But if we draw a trend line here, we're talking like 28 or something like that. So that's basically it. And um, uh, um, anyhow, that's all I really got to say. Um, Yeah. So yeah, so that is kind of disappointing, but again, with a part of like we were I still think gold and silver going up due to the debt problems we're gonna have over the second half of the year. I think about starting to price into the market, but I do also think that gold and silver are maybe probably also going down because they're pretty sensitive to interest rates, and if these rates aren't going to go down anytime soon, we'll see that. So like we talked about the US dollar, so we go look at like the Canadian dollar. It's getting right towards its lows here. And if it breaks the 72, it's a lot of trouble. Just so you know, like if we go look at the Canadian dollar, um, excuse me, I'm gonna go 5 years back so we can really see this. I don't know why I'm not logged into my stock chart account, but whatever. So we go look at the Canadian dollar here, but we can see, if it goes to these lows here of 2020, like that would be 68. So I think that could definitely happen, especially if Canada is cutting rates and the US isn't. And remember, one of Canada's issues it has is the housing bubble in Canada is much larger than the US. Like, okay, other than the top tier markets in the US, like in the two major cities of Canada, Vancouver and Toronto, the average home price is 1.5 to $2 million. So because of this, and because the favorite Canadian mortgage is a 5-year fixed in 2025, next year in 2026, that's when these mortgages are all going to come and roll over. So Canada kind of has to cut rates into that because these people are going to be, basically screwed. My dad told me he had a friend that actually, did his mortgage, whatever, and had to redo it. And this guy's a judge, so he makes pretty good money, but it's like, this guy's now paying like $20,000 more a year in interest payments. So that $20,000 more a year, okay, he can earn more. Like if he say has $1 million in savings, at least he's getting 5% instead of 2%, say now. So he's getting 30 grand more, but that 20 grand more is essentially like, it's 20 grand basically sucked out of the economy, right? It's 20 grand he can't spend on a vacation, he can't spend going out to dinners, et cetera, et cetera. So I'm going to leave it at that. And like I said, I'm doing this Friday night. Yeah, so and then also have a members update on Sunday. Sorry, so we're doing the Saturday night. So I'm gonna put this up and plan the blast. I'm not gonna blast it Saturday night because who knows who's gonna be around. So I'll blast this Saturday morning, and then Saturday afternoon you'll see the members update. And over the next few weeks, I got so much on my plate right now. I'm editing, doing the final edits of my book. I want to set up my Substack. But hopefully, over the next few weeks, definitely by the end of June, I'd like to set up my stock chart of the day Substack. So that will have a little more than the Patreon account. It will cost a little more, be more like $27 a month. I'm being a little superstitious. I was born September 27th. So, and also I want to make the yearly rate 300, which is 25 a month. So 27 makes it a little more. That's what you do. So I'm gonna do 27 a month on that, and I'm gonna have a bunch of blogs all posted, and for lifetime members, everything I post on this Substack will be posted on the Addicted to Profits website, which at some point too, I got to move it over to Stock Chart of the Day. I really apologize for this. I just got so much I'm doing in terms of other stuff. I got one stock deal I really like right now. It's a drone deal. So and I'll fire it off to some of you lifetime members who do some of these deals with me. So I got so much going on right now. I really apologize for that. So I had a few things happen. Just, I'm off Twitter right now. That's part of it. I was just like, you know what? I totally want to be focused on this. So I just deactivated my Twitter account. What happens with that? I don't know for those of you who are unaware, but when you deactivate your Twitter, what happens is if you don't, after 30 days, your account will just be deleted. So I'll probably go back on there in 3 or 4 weeks and just reactivate it, et cetera, et cetera. So, anyhow.